Hi guys, good morning. Right, okay. So I'm going to go through the tasks, the 11 tasks. But what I'll do is I'll do each task, so each task will be a video. So let's jump right in. So of course you should read the task and try it before you watch the video, of course. Okay, great. So Lola. So this is talking about Lola, and it says that she starts trading on the 1st of March, and she makes her accounts for the 30th of April. Before I talk about her expenses, I just want to explain what that means, so that hopefully this will help you with your basis points. Lola has decided to start her business from the 1st of March. The 1st of March. She's drawn her accounts from the 1st of March to the 30th of April. Sorry, just did that. 1st of March to the 30th of April 2016. 1st of March 2015. Now this is what she wants to do. She wants to be able to end her accounts every year on the 30th of April. This is her plan, right? But of course, in the very first, when she starts her business, she's not going to quite know what year, what month she will end. She'll just start, right? So she started on the 1st of March, but her plan is to end, if you like, on the 30th of April. Now, the financial year in which we decide when taxes will be paid or what rules will apply, if you like, run from the 6th of April to the 5th of April. So the government wants you to live, if you like, in these years, or will judge you based on where your accounts live in these in an accounting period in this sort of bracket, if you like. So she can do what she likes, but the question always is where is she in these accounts? Okay, great. So the rules that will apply to her will be based on the finance acts in every year. So for example, from the 6th of April to the 5th of April, from the 6th of April 2014 to the 5th of April 2015, the Finance Act will be different from the 6th of April 2015 to the 5th of April 2016. There'll be different laws and different rules. The question is, which rules will apply to Lola? So the first thing here is that, okay, what rules are going to apply to Lola? So the first year, the first law is that, well, Lola has to, first of all, prepare her accounts. Let's go to a new page. From the 1st of March to the 5th of April. That's the first rule. So she starts her business on the 1st of March 2015. She must finish for the 5th of April, because the laws or the Finance Act that will apply to Lola is the Finance Act from the 6th of April 2014 to the 5th of April 2015. So whatever laws or whatever requirements were needed or dictated by the Finance Act in this period, which the government set, is what will apply to the profits she's made from the 1st of March 2015 to the 5th of April 2015. So that's the first year, right? Now, the second year, which is what you're asked now, is that, well, we've done the first Finance Act. We've dealt with that one. We've dealt with the first set of laws. The next Finance Act, of course, must be the 6th of April 2015 to the 5th of April 2016. So this is the next thing we want to apply. So now we ask the question, and I'll go back to the table. I'm going to go back and click this table here as a guide. You should have it open whenever you're doing this question. Sole trader basis points, just to be very, so it's very, very clear. I'll wait, hopefully that'll load as soon as possible. Okay, great. Look at this. This thing says here that the first year runs from the start date of trading to the next 5th of April. We've done that. Now, the second year, let's ask the question. is there a period of account? So when we say, is there a period of account, we're asking, this is her period of account, what she's doing here. This is what this means. When it says, what is her period of account, this is her period of account. The accounts prep, her accounting year end. That's the meaning of the term period of account. Is there a period of account? That's the question. Is there a period of account ending in the second tax year? Well, let's go and check. Let's go and have a look. So her period of account ends 30th of April 2016. Does this period of account end in this tax year? No, it doesn't. So what does it tell us to do? We're literally following the rules. It literally tells us if the period of account does not end in that tax year, then the basis period must run from the 6th of April to the 5th of April in the second tax year. So it's telling us to go back here and then literally pick up, this was the first tax year, and then literally then say, well, since you can't find this in the year, we have to pay tax for the year, we must cover the year, or we must find some tax to pay. Go 6th of April 2015 to the 5th of April 2016. That's the second year. And so we're satisfied now with this. So now we look at the next Finance Act, which is the 6th of April 2016 to the 5th of April 2017. Oops, sorry. And then we ask the question again. Yes, we ask the question again. Is there a tax year? Is there a period of account that ends in the tax year? Well, there is. And you see, because we're trying to do we're trying to arrange our accounts to line up with what she wants. So now we do have a period of account. The 30th of April lives comfortably in here. I mean, it's early on, but it doesn't matter. It's there. So we have a 12-month period of account that we can now account for, which is the 1st of May 2015 to the 30th of April 2016. So this lies in this. So this is what you're going to do for this is the third accounting or chargeable accounting year, if you like. Third accounting year that's chargeable. Remember, the key point is we want to know what finance laws or acts will apply to these people, and that has to be the first year, that has to be the second year, that has to be the third year in terms of the rules that will apply. But we need a period that lives in that year to apply it. And literally what we always have to do is literally follow this question process. Yeah? And if you literally follow it, you should be fine. But keep doing questions on it, and I'll try and find some more questions for you to do. So you can see, just to answer, so I basically answered the bottom part of that question first. So the bottom part of that question, therefore, if you like, is the 1st of March to the 5th of April. That's the first year. We're not asked for that. That's 1415. Sorry. No. Yes, that's 1415 because that's 15 and that's 15. Then the next one, of course, is the 5th and 6th of April to the 5th of April. That's 15. 6th of April 2016, 5th of April, that's 1516, that's the second year. And the final year, of course, where they're asking for 1617 is the 30th of April, 16. And of course, it must be a 12-month period, so the 1st of May is the beginning of that 12-month period, isn't it? We're trying to end. So from now on, this is the third year, so from now on, when we do 1718, all she would do is, that's it, 30th of April, 17. 1st of May. She wants a nice 12-month period every single year in that 1st of May, 16, 1st of May, 17. Great stuff. Right. Okay. So let's go back to the adjustments to the profit adjustments. Let's go back to the profit adjustments. Where are we? Here we are. And this should be pretty straight. I'm going to run through these. You can probably figure out what's happening here with the profit adjustments. So with the profit adjustments, the questions are, should we allow, this is the first one, we cannot allow Lola's drawings because that's profit. So she cannot deduct drawings from profit before we can deduct it. Her wages are, of course, her husband's wages as a van driver, yes, are allowed, and they're reasonable. Those look like reasonable wages for a van driver, and it says wages, so we will allow that. So the 28,500 is not allowed. I mean, I'm just trying to I'll make a new note, a new page here. So not allowed. 28,500. So you need to add that back, right? You need to add that back, right? Whoops. Let's go here. Then this purchase of a van, well, this is a capital expenditure, 17,875, not allowed. You can't, 17,875. That's that's a capital expense. So you would put that through your capital allowances. So you put that in your, you calculate capital allowances on that, and you will get everything for it. It's only 17,875. Van operating costs, of course, that will be allowed. Lola's motor expenses, 60% business usage. So you can't allow all 100% of this. Only 60% of this is, if you like, allowed. So you would need to add back the bit, her own personal bit that you have deducted as well. So if this is 100% that you'll basically put through right now, and only 60% of it is allowed. So you need to add back 40% of this back, as 40% of it is not allowed. She's attended trade fairs, that's perfectly fine. The gifts, the golf trolleys, at first seem okay, but then it can't be greater than £50. So she's done 100. 100 times 50 is 5,000. So unfortunately, all of it is not therefore allowed, and depreciation is never allowed. So add all of those back. And then you should be fine with that. So that's question one. That's question one done.